Okay, good afternoon. I'd like to call the meeting of the Finance Committee to order for May 2022. Mark, are there any public speakers, please?
Yes, there are, Chair Zuckerman. We have two in
Okay.
person. The first speaker is Charlton D'Souza.
Good afternoon, everyone. So I just noticed something very interesting in this booklet, and that is the extension of the lease of the 165th Street bus terminal, where you guys have the buses going in. Many years ago, when Tom Savage was the president of the MTA bus company, of the new bus company, I told them that they should redo the 165th Street bus terminal completely. They need to rebuild that. Now, why are you guys entering into a lease with them, if I'm reading this right, but there's no agreement to rebuild the bus terminal? And no one in Jamaica, Queens knew about this. That seems kind of odd. But I do want to also talk about the Freedom ticket, the Atlantic ticket, and City ticket, because some of the elected officials had asked me how come they don't have that going to Far Rockaway. And that's a very good point. Even though Far Rockaway goes through Nassau County, it ends in Queens. So therefore, all those city residents should be able to use the same discount programs as the rest of the people in Queens. So Mark Young, I look forward to him because he's the yes man on that and makes the decision. Oh, I'm sorry. But Mark, and the board and everyone else does that. So we do need that. We need that done. And I look forward to the leadership on this board because it's not fair to those residents at Far Rockaway. They have a very long commute. And the elected officials had brought that up to me. So I'm bringing it up to you guys because all the board members make that yes decision. Sorry about that, guys. But otherwise, I hope that y'all can look into this bus terminal issue and redoing and rebuilding the bus terminal, or just end it at Supton Boulevard over there at the air train station. Integrate that. Thank you.
Thank you. The second and final speaker is Jason Anthony.
Hey Neil, Jason Anthony from Amazon Labor Union. Clearly, the previous speaker only thinks about Queens. Let's think outside the box. Because City ticket, Atlanta ticket is about all of us. Let's think about our brothers and sisters along the Hudson line. I'm born and raised in the Bronx. And those along the Hudson line, lack thereof, better transit alternatives. Because they only have two stations with subway access. That is Yankees, East 153rd Street, that they have the 4B and the D, and Marble Hill to 25th Street, that they have the 1. Let's offer them a better transit-oriented. Let's not be exclusive. Let's be inclusive, shall we? And I'll see you guys on Wednesday.
That concludes the public speakers.
All right, thank you, Mark. Mark, on behalf of this board, I want to apologize for the kind of unnecessary commentary that sometimes folks launch at us in public service. We're up here to take comments. We're not up here to take attacks, and you don't deserve that, and no one in this board does, so I want to apologize for that. Okay, administrative action number 1. Can I get a motion for the approval of the April 2022 minutes, please? Second? All in favor say, any discussion, any edits? None. All in favor say aye. Aye. Opposed? Abstentions? Our motion passes. Thank you very much. Okay, Mark, Budget Watch, please.
Okay, thank you. Chair Zuckerman, committee members, the Budget Watch is included in the exhibit book and also on mta.info. This month, the information contains operating results through April, and we have information on subsidies through May. The table at the top of Budget Watch compares year-to-date April results to the adopted budget, and the themes are similar, largely similar to last month. It shows that as of the end of that month, there was a surplus of $191 million overall. This was driven primarily by operating expenses, which were $296 million below budget, and subsidy receipts, which were $203 million above budget. Partially offsetting those positive results were operating revenues, which were $277 million below budget, and debt service, which was $32 million over budget. So looking at some of these figures in greater detail, as you know, I always like to start with fare box and toll revenue, since that's particularly important to the financial recovery of the MTA at the moment. As reported at many of the committees today, earlier today, ridership does continue to grow, but it remains well below the pre-pandemic levels. I do want to note from a financial perspective, one notable thing about April is, if you recall, the financial plan assumes revenue targets that kind of escalate on a quarterly basis. So April was the first month of the second quarter. So the bar kind of got higher in the budget on the fare box revenue and toll side. So while we do continue to see gradual growth in ridership, we were not able to keep up with what was in the budget in April. So looking at April alone, fare box revenue fell $67 million below the budget, and year-to-date, it's $237 million unfavorable. On the other hand, as you've heard throughout the year, toll revenue continues to exceed the projections, and as of the end of the month of April, it was $30 million above budget. Through the end of April, moving to expenses, they were $296 million below budget. $133 billion of that was in labor-related expenses, and most of that was related to vacancies in the various agencies. Overtime expenditures exceeded the budget by $77 billion through April, mostly related to vacancy absentee coverage. Non-labor expenses were $163 billion below budget through the end of April, and that's mostly due to the timing of material spending and contractual spending. Debt service was over budget, as I mentioned before, but that's really a timing issue that'll correct itself next month. As always, we have more up-to-date information on subsidy receipts. Through May, subsidies were $227 million favorable, again, consistent with what we've been seeing in prior months. The primary driver of the positive result is in the real estate transaction taxes, which continue to show strength, and were $239 million favorable. Payroll mobility taxes also were favorable. But on the flip side, the petroleum business tax and for-hire vehicle surcharge and MTA aid were below budget. We continue to monitor all these results as we develop the July plan. Thank you. Are there any questions?
Questions? Go ahead.
What would make the PMT come in under expectations?
It's essentially the PMT. We use projections provided to us by the state, assumptions built in economic recovery projections, and in large part, we've seen indicators that have exceeded the original projections.
Okay, thank you.
Please.
Yeah, Mark, taking a look at the February financial plan and how many openings you have in the authority here. I mean, the openings go between like 12%, 15%, down to maybe 8% of, I mean, isn't it a formula for, first of all, it appears to me to be a formula for future overtime where you'll be turning around for quite a long time saying, why is the overtime going up? Well, because we haven't filled these positions. But how fast can you really fill a deficit of hiring that's that large? I I mean, what's the sunset when you're gonna get down to like a 3%, vacancy rate or whatever you're looking for?
Yeah, I'll answer that. All the agencies and headquarters are pretty focused with HR on filling vacancies and filling them efficiently. I don't think we have a specific date of when we would get, from, 5,000 vacancies down to 3,000, but there's a effort underway, particularly on the operating side, to try and fill, as many vacancies as possible. As you noted, there's been an increase in overtime costs, mainly related to those vacancies. So I know Transit's, very focused on it and so forth. From a budget perspective, we generally assume we budget for the vacancies getting filled, but the reality, and particularly given the tight labor market, is it's pretty slow to get it filled.
Thank you.
Other questions? Okay, let me just make a couple of quick points. So Mark, we have a $300 million shortfall year to date against budget. Is that correct? Rough.
On the revenue side, we're
Yeah.
about 276 billion
Oh,
below.
I'm just.
Yeah.
Oh, that's the expense line. I'm sorry, 267. So we're close to $800 million short this year. And as you guys know, we are got a $2.6 billion mix of federal and state subsidies, mostly federal, that closes that gap for us. So that's a yawning gap that's happening due to ridership, and that's something we have to be mindful of. Coming to my second point, which is we have a big conversation we're going to have for the July plan redo that the staff is doing, that McKinsey is providing major inputs to, and that's going to really have us think about what the next several years looks like. Now, obviously, the rest of this year, but more importantly, frankly, the next couple of years. So I think I'm just repeating stuff that we've talked about the last couple of months, but the purpose of this committee, in my opinion, is that we're a committee of the whole to make sure financially this organization is sustainable over the next several years, because the ridership is not there. So we have to be mindful. So I'm going to turn to our CFO just to remind us about what the plan looks like over the next couple of months for that July plan conversation.
Thanks. We are in the middle of working with McKinsey on updating the ridership forecast, looking at alternative scenarios, and that work will be completed and then incorporated into the July financial plan. I think it's, and we've said this, based on some of the, based on, kind of the ridership to date, which is, again, we've been setting some records, but it's growing at a much slower pace than what we have built into the financial plan. As Mark indicated, we're supposed to tick up to around 75%, and then it's supposed to be, north of 80 by the end of the year. That was the original kind of 2022 is a year coming out of the pandemic. Ridership would snap back, not 100%, but snap back, and that's going slower. So we're going to be incorporating into the July financial plan, after we complete the work, the view on, what the impact is of, if there's a slower ridership recovery over a longer period of time. And that'll, the way to think about it is any loss of revenue this year and next, to the extent it's not offset, right now we're getting offset by increased subsidies, we're getting offset by lower operating expenses, but to the extent the ridership revenue shortfall, continues to grow and cannot be offset, the way the financial plan is, currently built is the federal dollars are used to fill that gap, and the bigger the gaps we have to fill, the less amount of time the federal revenue, the federal subsidies will be around to close the gap. So again, if you remember, in the February financial plan, we assumed the federal dollars would cover us through 2025. I think the key to looking at the July financial plan is that date changed, does it come in, and what does the out year gaps look like based on new ridership. But we're working all that, and we'll have, more detail. I think, again, either way, we'll still have, considerable time to work through solutions with Albany and others, that we're not going to, even at the current ridership levels, we're not going to, we'll have plenty of federal money, for this year and even next year, and, but we'll see the plan at that point.
Andrew.
Yeah, I don't know if I'm sure you are because you're smart, but I'm sure you're figuring in the high, and I hope it doesn't last a long time, but if it does, it's actually good for us. The incredibly high cost of gasoline is going to cause fewer people to drive. The congestion pricing kicking in is going to cause fewer people to drive, and I'm assuming and I'm hoping that those folks are going to turn to mass transit. And that's got to be figured into the equivalent to the formula somewhere.
So the modeling we're doing, does look at all, mode changes, and, the price of gas is a, very fluctuating, impact. Certainly congestion pricing in terms of, creating more demand in transit that's built in, and so forth, as well as it's helpful, as you know, the congestion pricing helps our capital program, but also makes our bridges and tunnels more competitive, versus the alternative, which right now are free bridges. So we are modeling all that in. I'd say the biggest factors are perception of transit, right, which is a mix. If you look at where we are right now, it's a mix of, people still fearful about COVID and so forth, and obviously the safety issue is a big one. So there's that, but the structural changes underlying, that add to that are the shift in perceived, the work from home and hybrid work schedules, which change our commuting, demands, and then even non-work trip demand based on acceleration of, different e-commerce formats. And, we even look, the analysis looks at, impact of, bikes and other either, sometimes competing, sometimes complementary modes.
But one of the good signs, quite obviously, is that the times of discretionary travel, nights and weekends, they're really turning back to the system. I was on standing room only trains this whole weekend, so and I made sure that it wasn't something that had broken down and there was a long gap. So people are actually riding.
Absolutely. So when you think of, for 60% during the week on average, and, we're showing closer to 80% on the weekend, that shows exactly the point you're making, where the weekday is obviously much more impacted by people's choices around, working from home.
So any other questions on Budget Watch? So just as Andrew just raised, just continue to keep those assumptions that you want to talk about, the positive ones and the not so positive ones, when we have that discussion in the July plan, because that's going to be a very meaty conversation. Okay, Pat, I see you're virtual, you're live, but you're not here. So Pat, Finance Watch, please.
All right. Thank you, Commissioner. So Finance Watch is on page 21 of your director's desk this afternoon. We have a few transactions to report, the first being the issuance of our 2022 C TBTA payroll mobility tax bonds. These bonds were priced on May 4th and 5th in a very challenging and difficult market environment. The transaction successfully closed on May 12th. And as you can see here in our statistics, the all-in true interest cost here was 4.48%. The average life of the issue is 25 years, just slightly over 25 years. Ratings were all affirmed, and you should have a detailed email in your inbox from Marcia Tanian on some of the characterizing some of the market activity that those days of pricing, which I think can be helpful. Again, a very challenging environment, and we saw market dynamics shift tremendously on our final day of pricing on May 5th, and it caused, as you can see here, our cost of funds here to be higher than what we had hoped for. Moving on, we have a number of variable rate letter of credit extensions that we're working on. We'll be working to extend U.S. Bank on some TBTA variable rate bonds, the 05V4s. We will extend Bank of Montreal on some transportation revenue bonds, the 2012 A2s. And then we have two transactions that we're working with TD Bank on, a DTF, a variable rate refunding series, 2008 A1s. And then lastly, the DTF variable rate refunding bonds, 2008 A2As. So we'll be working on all those and we'll report on those next month. Lastly, we have a fuel hedge to report. On April 28th. We executed a 2.8 million gallon hedge for ULSD, ultra low sulfur diesel fuel. And the winning bid was submitted by Cargill Incorporated at our all-in price of $2.86 per gallon. And this hedge covers the period of April 23 through March of 2024. I'd be happy to take any questions on Finance Watch at this point.
Questions? Well, Pat, thank you for managing us through what is becoming a difficult environment. 4.48 rate for the long-term bond is not something we were expecting to see. For those on this board who have personal mortgages, you're probably and got refinancing the last couple of years, you're a little startled by that number. And unfortunately, we don't know where it's going to go, but probably not down in the near term. Pat, you have an action item, please?
Right. There is an action item, and this is the annual investment report. There's a staff summary in the book, as well and the report itself appears in the exhibit book on page 32. This is an annual update of our investments, and with each annual update, we also ask the board to renew the investment policies that we adhere to, obviously in the treasury operation as we invest our monies for the coming year. So I would ask for a vote to accept and approve the investment policy.
Second?
I second.
Any discussion? All in favor, say aye. Aye. Opposed? Abstentions? Our motion passes. Thank you very much, Pat. All right, Mark, 3 information items to you.
Yes, 3 of them. The first one is an annual information item, and this specifies and summarizes the amounts that the MTA is billing the counties in New York City for station use and maintenance for April 21 through March of 22. Payments are mandated by state law. They're based on a CPI index. And the total amount being billed for this period is approximately $191 million. Controller Jim McGovern is here if there are any questions.
Folks, page 35, anything? Keep going.
Okay. The second item is an information item included in the exhibit book and MTA.info. It's the annual pension fund report. Senior Director, HR Margaret Connor, and Chief Investment Officer Valerie Bannon are available to answer any questions.
Do they want to say anything, or no? They don't want to say anything?
Yeah.
Okay. Any questions on the pension?
And the third information item is the draft audited MTA consolidated financial statements for the years ending 2021 and 2020. This was discussed earlier today at the audit committee meeting. The materials are available in the exhibit book and MTA.info as well. The final audit report is expected to be approved by the auditors on May 27th. Again, Jim McGovern is here if you have any questions.
Well, knowing how the audit chair is sitting to my left and is a very talented executive, I'm pretty sure that's going to be a flying audit, is it not? Flying colors. Any questions? Okay, thanks. Kavesh, procurements to you, please.
Thank you, Mr. Chairman. For Finance Committee approval this month are 3 items for MTA headquarters totaling $17.2 million. The first item is a 5-year extension of a service agreement with Cambridge Systematics in the amount of $7.6 million for continued hosting, maintenance, and improvement of the central server subsystem of the bus customer information system. This is one of our key enterprise platforms undertaken in the past decade to improve customer communications and communications. This serves as the MTA's automatic vehicle location system by generating and electronically broadcasting real-time locations for all active buses in the MTA fleet and feeds information to digital signs, automatic passenger counting, transit signal priority, and a various host of MTA apps, including Open Trip Planner. The second item is a modification to the tenant management and accounting services contract with Greystone and Company for a total of $4.865 million to extend the current contract by an additional 10 months at a cost of $4.382 million, and to perform property management functions for assets acquired by the MTA for the Second Avenue Subway Phase 2 project at a cost of $483,000. The proposed property management scope of work provides for a combination of accounting and operational services required to manage a portfolio of residential, commercial buildings, and fence lots being acquired. The third item is a 3-year extension to the enterprise-wide governance, risk, and compliance system contract with Ernst & Young to provide continuous software licensing and maintenance and support of the MTA's GRC system in the amount of $4.7 million. This extension will also allow sufficient time for Ernst & Young to successfully complete the transition of MTA agencies from an on-premises GRC platform to a cloud environment. The software licensing and maintenance and routine and emergency technical support services, including firmware updates and patches, are also included in this extension. I request your approval for these agenda items.
All right, thank you, Kavesh. Any questions on any of the items? Please, Elizabeth.
Am I on? I'm on. Were these intended, what we're going to vote on, these procurements, were these competitively bid out, or were
Yes.
these extensions? These were competitively bid out?
They were competitively bid out. These are extensions based on the existing contracts.
Okay, thank you.
Other questions? All right, so I have one on the first. I'm going to channel a former board member, Chuck Merdler, who was always very thoughtful in the notion of competition. I see some smiles remembering Chuck fondly. Look, Cambridge will be 16 years in the role of this provider, this service they're providing. And so I have two questions, and I assume Transit's has reviewed this, of course. So I'm just trying to understand, 16 years is a long time to be providing a software service. Sometimes one believes at that point you could have bought it 17 times over, and it's just a long time to be in. So is there anything you can provide, Kavesh, from the conversation about this procurement, please?
So, Chair, good question. So, when we discussed this matter with buses and Sunil Nair, this very topic was brought up, and basically what has happened over this period of time is that MTA bus have very specific requirements with a rather large fleet of circa 6,000 buses that we have. So as we've gone through this process working with Cambridge Systematics, we have tinkered and made this a very specific service that is provided to us. To go out at this stage on an open RFP now wouldn't be to the benefit of buses. As a chief procurement officer, I would recommend that if the next time they do come to us, we would at the very least have to have a competitive process and resolicit.
No, Neil, we discussed this when we were briefed earlier in the week, well, last week on buses, and we did go through all this detail. And I happened to have asked the same question, and Frank and Rich and Craig and Monica all assured me exactly what Kavesh had said.
Yeah, I think that makes sense. And Neil, I think what you're alluding to is, we have to, make sure, the more customized we get, we also become a captive of the service provider. And so we need to keep thinking of, how to keep, how to keep our costs down and keep them competitive, even though we have highly customized needs. I assume that's kind of the point. I assume you run into that in many of your procurements. And
Yes, true. And we definitely bear that in mind. It was the first question I posed as well, simply because it's also the ever evolving technology, but more importantly, it's also we have to be competitive, especially with dealing with taxpayers' money.
Yeah, it's a two-pronged problem. One is you don't want to get beholden to a single vendor. But secondly, when over a course of 20 years, you're paying the same company to basically be a captive, which becomes akin to being an employee, you wonder, should we have just brought it in-house at some point? Now, of course, there's a competitive advantage question where they're better at this than we are, and fine, we'll use a third party to do it. But if they're living off us, we might as well have just done it ourselves in the first place, because we're just passing profit to somebody else. And so that's a mindset different companies have at different places. Anyway, any other questions? Any other procurements? Can we get a motion for all three at the same time? Second.
Second.
Any more discussion? All in favor, say aye. Opposed, abstentions, motions carry. Thank you very much.
Thank you. There are no other procurements for the committee.
Okay, thank you very much. Okay, and we are, Ms. Patel, do you have anything you want to share with us, please?
Sure. The monthly MTA board meeting on Wednesday, 5/25, will also be the annual board meeting for FIMTech, or the First Mutual Transportation Assurance Company. For informational purposes, the FIMTech board book has been distributed to board members in advance of the meeting. The book contains the annual meeting newsletter, historical financial information, and a statement from the independent actuary that reserves recorded by the FIMTech meet state requirements and make reasonable provisions for unpaid losses and loss adjustment expense obligations. No vote on this is required, but I will give you a brief sort of overview of FIMTech, just so that you understand the financials that will be presented in the book. The annual report was made available to you, like I just said. It has the audited financial statements, an actuarial report, an investment report, and also a newsletter, and it provides an overview of the operations. To give some history, FIMTech is the first pure captive insurer in New York State and is licensed to place insurance and reinsurance programs on behalf of the MTA and its agencies. The MTA board members serve as the board for FIMTech. That's in accordance with our bylaws. FIMTech currently has two officers, Pat McCoy, Deputy Chief of the Financial Services, and Claudia Rubin, who's the Deputy Director at Risk and Insurance Management. Some of our insurance programs are listed on the top of this slide, include property, excess liability, our owner-controlled insurance program, as well as a few others. Today's FIMTech's total assets are in excess of $1 billion, which support various insurance programs across the MTA agencies. FIMTech is regulated by New York State Department of Financial Services and is audited periodically by them. We're currently in an audit, a fourth audit by them. The captive allows MTA to obtain broader coverage with better terms and conditions and increased control over the insurance programs. Some of the highlights from 2021 financials are that we had a net loss of $62.5 million, primarily due to increased loss and loss adjustment expenses due to adverse claims and case outcomes. We also had a loss included in that $62 million of $8.3 million due to the investment losses. As a result, FIMTech net position or equity was reduced by $224 million from the $287 million on the prior year. This compares to an average equity position over the prior 3 years of $237 million. Nevertheless, key ratios which measure financial strength and adequacy of reserves remain well within insurance industry recommended levels. It's also in the financials when you look in the book. And also, the actuary provided a positive statement of actuary opinion regarding FinTech's reasonableness of reserves given its exposure. Yes.
Neil?
I'm sorry.
It's all right.
Apologies.
So do we have some kind of stop loss for catastrophic loss that exceeds what we're talking about? Do we have a secondary sort of umbrella policy and off with another insurance company in the event of catastrophic loss?
We do have representatives from Risk and Insurance Management that can answer specific questions, but I think Jay was going to go into the second slide, which shows on the reinsurance that we do acquire to cover, catastrophic. When you think of the really big catastrophic losses like
That could hit.
Sandy and other big storms, what ends up happening is we have, retention or deductibles at each one of the agencies, and then most of the insurance that FemTech writes, then we seek reinsurance in the commercial market.
Yeah.
And then above and beyond that has been the federal government and
OX.
FEMA, which is not,
So,
not a insurance policy. It's been, the experience when you have, very large losses.
Right.
So the approach, and the team can comment, is that, they look to acquire as much insurance in the commercial market that is,
Backing this up.
reasonably available.
Yeah.
The markets have gotten, the insurance market's gotten much harder.
Sure.
In other words, both the capacity of the amount of insurance we can purchase has come down, and the price has gone up. And
No,
we'll walk through
I was
some
just thinking of the
details.
condo collapse where the settlement came in over somewhere in $1 billion.
Right.
And clearly, we could, not saying it's going to happen, but theoretically, we could have a much worse disaster in this system. So,
Yeah.
yeah, okay.
And it's, again, when you think of, FemTech is a way to kind of efficiently manage the risk of all the agencies, and is another way to, in essence, by having the balance sheet that we've built up over time, to take some of that risk out of the agencies in terms of the volatility. We try to purchase as much as we can in the commercial, but you're right, it's, some of these risks are, it's very hard to find the insurance at a reasonable price, so it does become kind of a self-insurance, issue. And, particularly on the property side, the other thing is, not only have the, storms gotten more severe and so forth, but, as the replacement cost of our assets go up, right? And if the amount of insurance you're getting is going down, your exposure just increases. And Claudia, I don't know if there's anything else you want to add to that, or if I covered it. Okay, thank you. The one thing I'll say on the loss this year, this was, because of some very large cases, liability settlements, unfortunately for us, being in New York, the, claims tend to be very high. The courts are, as you know, very friendly against us. And so, if you look at the history of FemTech, one year there's a loss, next year, we don't, so forth and so on. And the whole idea of having the 200 million plus of equity plus the balance sheet is to be able to smooth out, out those losses from a budget perspective.
Anything else? Done?
No, I'll have two more slides.
Yeah, go.
Sure,
Go.
okay. So as Kevin just mentioned, property program is procured through our global reinsurance marketplace. Our coverage is $414 million this year, and our capital markets is for $100 million, what we consider Metro Cat MetroCat covers storm surge and earthquake and will mature on April 30th, 2023. For that renewal, we'll come back to place another cat bond and will seek board approval. So the 2022 program limit was reduced to $414 million from $500 million, which we had in 2021. That's due to current market conditions, global losses, and capacity, as Kevin talked about. We face the challenges that are not unique to the MTA. Many companies and agencies are facing significant premium increases and loss of capacity resulting mainly from extreme weather events, wildfires, wild storms, and floods. In order to keep our costs relatively flat, MTA purchased the $414 million of reinsurance for a total cost of $38 million. It leaves the MTA to self-insure approximately $86 million of additional limits. We also, just to give you sort of a perspective, we were offered an additional $60 million of capacity for a premium cost of additional $10 million. So we purchased 415 rather than spend the extra 10 million to get to that piece.
Yeah. Yeah, if I could comment on that, and it's not just the 10 million, it's, you know, our brokers and the team, you know, put together this huge matrix of everyone's, you know, basically going around the globe working with the Marsh and getting all the insurance bids and putting it together. And at the end of the day is one thing that happens, you know, very rarely once you agree to pay a certain price for insurance, does the next year, does it go down? And so, you know, part of the analysis is that, you know, where you draw the line and which bids you kind of throw out that seem particularly egregious and also would set a benchmark for the cost for next year. So it's, you know, there's no magic formula. I would say that, you know, Dave, as you mentioned, you know, this amount of insurance is not, you know, a large amount of insurance, you know, given, you know, the events and the property. And if you look at the, you know, long history, we used to be able to get, you know, $1 billion of property insurance pretty easy, and then it went down to 800 and then down to 5, and now we're, you know, just hovering, you know, north of 400. And look, if the market gets softer again, we can buy more or cheaper, but this is kind of the reality of where we are. So we're not trying to skimp and, you know, not protect ourselves as much as possible. It's just it's a matter of where it is.
The 400 that you just mentioned is to protect assets of how large?
I think the replacement value of the assets was in excess of 500 billion. Is that 560 billion? So, you know, you know, it speaks for itself.
Yeah, Jay, can you explain to me, I'm a little dull here or something, but the second to the last bullet point there, market exiting the rail industry, can you explain to me what's the function behind that?
Good afternoon. Hi, yes. So we had a few markets that dropped the program this year. They did not want to, they not continue riding rail or transportation industry at all. So we lost that capacity.
Yeah, I think, and Claudia, I don't know if, you know, some of the complications in rail and transportation is, you know, it's, you know, understanding the assets and, you know, the replacement cost and so forth. It's a more complicated asset to insure, and then for them to even reinsure versus, you know, condos on the coast of Florida that, you know, it's, you know, kind of a much more generic type asset in terms of knowing replacement, but I don't know if.
Yeah, that is correct. Yeah, the rail industry in general.
No, you leave me more confused than I started, but that's okay.
I think what they're telling you is that no matter how much certain people deny climate, the one people that will not deny climate are the insurers.
Yeah, I just start to feel like, we built a house, a place we should not have built a house, and we're asking somebody else to support us, but I don't see that in the rail industry. I mean, the rail industry, of course, runs through some very low properties, but, Metro North, particularly with us, is very low. There's a lot of water issues, so perhaps that's it, but I don't see what's behind it.
I guess what Norman is asking is there any feedback from the insurance companies that have pulled out of this market in particular that we could get? I'm not suggesting if you don't know the answer now, maybe that's something you can get some information for us, because as Norman's saying, maybe it is canary in the coal mine kind of information we would benefit from.
So what we heard from our insurance broker is that it's a hard industry to insure. We do have a representative from Marsh. He communicates with the insurance.
Well, maybe we could take some more than, maybe you can go one level below hard if you want to provide, ma'am, anywhere there's a microphone. We have enough of a quorum. Go ahead, sir.
Good afternoon. My name's Tom Kelly. I'm a managing director at Marsh and client executive working with risk management in the MTA. Yes, the assets in the MTA are confronted with an insurance market right now that is particularly difficult. And rail assets in particular, because of some of the characteristics being below ground and because of specific losses, present insurance companies insuring all risk property and flooding with complications. There is a supply-demand aspect to the marketplace, and we're in a particularly difficult time over the last 30 years in which the insurance market, U.S., European, Asian, the entire world market has contracted in the availability of capacity, and that's resulted in them rebalancing and relooking at all of their risks. So this is not a problem that's specific to rail, although because of the difficulty of and where you are and the value of the assets make it a challenge for certain underwriters.
Thank you. Appreciate that. And thank you for your help on behalf of the MTA. All right. Anything else on insurance?
Sort of the portfolio and our investments. I'll be really brief. The investment portfolio is approximately $823 million in size and comprised of 8 individual trusts. Like other insurance assets of this nature, assets are conservatively invested in high-quality fixed income securities. In aggregate, the largest allocations are AA plus rated U.S. Treasury securities at 37% and mortgage-backed securities at 22%. Overall, credit quality of the aggregate portfolio is AA and is yielding 2.61%. As inflation and interest rates have increased, portfolios have experienced some unrealized losses, but have outperformed their benchmarks over Q1, the trailing 1 year, and since inception with the current investment manager, which is BlackRock for us. So it's not very unique to us, right, with interest rates and inflation. So we'll continue to monitor that with the markets.
All right, Jai, thank you very much. Barring, you have any more on that? No. Any other questions on insurance? Okay, David, over to you. Let's focus on the 4 action items first, please. And just I want a quick note. 2 of these 4 action items are tied to our most recent capital plan, so we should be excited about them. There's 2 of them that David going to hit there and be like, wow, they're doing it. It's good stuff. So, David, the floor is yours.
Thank you, Mr. Chairman. We have 4, as you mentioned, 4 action items. The first, there are 3 for New York City Transit. The first is an extension of the lease with 89th Jamaica Realty Company for the Jamaica Bus Terminal in Jamaica. The second action item relates to the acquisition of property interest for Phase 2 of the Second Avenue Subway. And the third is an amendment to the lease license agreement with Swift Vending for operations of vending machines at various New York City Transit locations. The last item is for MTA Metro North Railroad and is an authorization to enter into various agreements with the City of New York in support of the replacement of the Park Avenue Viaduct. Bob Paley, head of MTA's Transit-Oriented Development Group, is here to answer any questions regarding the second item. There are also 4 information items. Happy to answer any questions regarding any of the foregoing.
So questions? It's near the end. I'll get to the page number. 107.
David, the Park
107.
Avenue,
107.
It begins on page 105. I'm sorry?
the Park Avenue viaducts are just extensions, right?
Yeah, basically it's agreements whereby we're going to use property, permanent, temporary,
For
the
the next
usual.
five.
Yeah. More facilitating.
Got it.
Let me have a motion, then we'll answer. More proper format is motion to approve.
I so moved.
Can I have a second? Any discussion? I do have one question. Maybe Mr. Paley will answer this one. So, is there a dollar ceiling on all these takings or eminent domain? I see a lot of we're giving permission to buy stuff, but we have obviously we don't know the prices and where's that ceiling of monies that we would spend on this.
So the budget is actually included in the Second Avenue subway budget. There's a real estate acquisition line in there. I don't know this particular component. These are pretty, technical, standard kinds of acquisitions just for temporary easements for rock bolts, that sort of thing. So they're not very expensive.
My grandfather always said, "Don't count other people's money. What you may think is inexpensive, other people think is a windfall." So I don't know, sir. Sir.
On the issue of the vending machines, so we're going to be installing Omni vending machines in October, and because of the space that those take up, we're going to remove some MetroCard vending machines. Where is there room for these CVS machines?
These exist already.
Where are they?
They're at Union Square and at Chambers Street. They already exist, and we're just looking to extend those.
To extend the existing?
Right, and any of the new vending machines, we put in a lot of PPE in July of 2020.
Right.
Those may be over time converted to other uses, but in no way do they interfere with any of the TVM locations, and we'd stay away from the TVM locations.
Thank you.
Okay. Any other questions? All in favor, say aye. Aye. Opposed? Abstentions? Thank you, Hada. Okay, your information items, David.
One is the monthly report on agreements entered into directly by the Real Estate Department pursuant to board policy. We have a permit extension with the County of Westchester to allow for access across their property onto Metro North property for parking, employee parking, and access to the platforms of capital construction work. The third is a permit with the town of Ossining for temporary use of our Ossining Station parking lot for a local Earth Day event. And the last is a permit with the County of Westchester to support our ADA construction efforts in Scarsdale. All our information items.
Okay, any comments, questions? No? Okay, I skipped over just identifying the February materials in the book, pages 50 to 102. So if anyone wants to discuss them, have any questions on them, please, this is a moment to do that. Elizabeth, I know you were asking about the March comparison of revenues. I don't know if you want to ask about that. This is the moment we can do that.
Find my page. It was page 83. I just. Let's see. The MTA revenue per passenger I was comparing 2019 to the current term, 2022, and the projections, and for some reason March was really low. I don't know if anyone could. In 2019.
I'm guessing it's because the comparison was when the bad stuff hit in March of 2020. So
Is
the
that what
number,
it is?
I'm guessing the number was low in March of 2020. So
And that's
why,
what brought it down.
Yeah, that's my
2019 to 2020.
Yes, correct. It's 19 and 20, so January, February, and March are the 2020 numbers. So March was the first month of the pandemic.
Thank you. Thank you, Chair.
Any questions on the financial statements in the book? Any other business? Motion to adjourn? Second? All right, adjourn. Thank you very much. See you next month.